In this video, I'm going to discuss what people like Elon Musk are saying on Twitter and on CNBC, and we're going to discuss why what they're saying is leaving out the really important details for you. So stick around till the end, and hopefully you'll be able to have a better understanding of what's going on in the market and why a lot of this important information is being left out when people are marketing it online. And I also just think it's interesting to note that the people that are defending the retail investors and going against Robinhood are the people that really don't have that much to lose in the situation anyway. They're already multimillionaires, in many cases billionaires, so for them, getting involved doesn't really have any negative effects other than it allows them to see as if they're a man of the people or a person of the people and actually looking out for the little guy rather than actually wanting to defend the hedge fund. So there's really only upside for them getting involved, and that kind of turns me the wrong way, and I think there's a couple issues as well with that. Now, I love Elon Musk, but his tweet is extremely dangerous. All he's doing is adding to the hype cycle that's already online, and he's not actually talking about any of the fundamentals or logic that can go into this situation and how it might affect the people that are following him online. So all he's doing is tweeting a link to the message board, writing GameStonk, and although it seems innocent and it's up to the people to decide and do their own research, he knows, and Elon Musk in general has a lot of influence. So by him tweeting these things out, it's just adding to this hype cycle, adding to misinformation, adding to the confusion that everyone already has on the market. And in times like that, speculation increases, losses can definitely increase, and it just adds to more stress and bad decision making that can come along with it. As billionaires, they're far removed from the actual dangers of getting involved in the situation with GameStop and buying stock or buying options. The losses for them are pretty much minimal, whereas a lot of the people that are getting involved and actually reading Elon's tweet or seeing all these interviews on CNBC that are talking about how great it is that the retail investor is taking on the hedge fund, they're leaving out the negative implications and the risk of what can actually happen for the retail investor when they're getting involved. Now, I totally agree. I think hedge funds need regulation. Shorting stocks above 100% makes no sense, but that doesn't mean that in the short term these regulations are going to be put in place so that the retail investor can benefit. And then we get to Chamath's tweet, and I admire how he is able to actually connect with the retail investor. He's able to connect with millennials. He has a great social presence. But in his tweet as well, all he's doing is saying, let's go, like, let's get involved in this, but he's not actually providing any useful information for people to make an educated decision on their own. He's only adding to the hype cycle as well, and for him, he's a billionaire, he runs a huge fund, and he has very little to lose by this. And sure, he bet $150,000, that's a lot of money that he can lose. It went up, and then he actually sold out and donated to charity, and that's great. It really is. I appreciate that. Donating to charity is awesome. But at the same time, in a way, he's actually manipulating the market as well. He's tweeting out there, he has influence. He knows that if he tweets out there, people are going to add to the hype cycle, increase the price a little bit, then he sells out before he has to have any sort of losses. And then he's able to just go about with his day and talk about how bad Robinhood is without ever, at least from what I can see, addressing the potential dangers in the short term for retail investors that are actually involved in this cycle or in the GameStop situation. And I know I've said this a couple times, but I want to keep repeating it. I agree with the premise, the fact that hedge funds have way too much control and are able to manipulate the market. My point here is that all these billionaires and all the people that are talking about how bad Robinhood is and how great the idea of retail investors ganging up and being able to take over and change the system, they're missing out the part that it takes a long time to change systems, as we can see with tons of different things going on in our world. So in that short term, or in the time until the actual system gets changed, the people that are going to get hurt the most are the retail investors. They're not anyone that's going on to CNBC and talking. It's not any of these billionaires that are tweeting about it. It's the retail investors. And I think it's important, if you're going to hype something up and talk about getting involved, that you also talk about how systems take time to change, and it's not going to be these hedge funds that actually get hurt in the long run or in the short term. It's going to be the retail investors, the people like you and me who are getting involved and are not actually educating themselves on what's happening in the market and how these things can be happening. I did a video, it was part 3 of the GameStop playlist, about certain warning signs where we talk about Tilray, which was another company that had a similar situation to GameStop. We kind of show you where the stock went, how it dropped, and also just a couple things as well with the tech bubble and how it's similar to this. So I encourage you to check that out as well. And the one that frustrates me the most was listening to this interview with Kevin O'Leary on CNBC, where he's talking about how the education system doesn't prepare young people for being financially literate and understanding how to invest, which is definitely very true.
They taught them nothing about investing, and then along comes a platform like Robinhood, and all of a sudden, kids in their 20s and 30s that would never get touched by Money Center Bank or an online broker because they're not a profitable account. They only have a few $100s to invest. Vlad and his team create this platform and now have millions of people learning about the ways of the market. And the market, even for sophisticated investors.
They're learning by losing, though. They're learning by losing.
Every investor loses money, Bill. Every loser. Everyone learns from the market.
I don't think we...
So you're going to protect me from losing money? Are you kidding?
He basically says that Robinhood is filling that in and allowing people to understand how to invest, and we need to let what's happening keep happening. But the problem is that Robinhood really isn't teaching people how to invest right now. All it's teaching people how to do is follow a crowd and follow the hype cycle. Although people are understanding what a short squeeze is and how to actually take on hedge funds and how hedge funds might be making money, they're not understanding long-term investing strategies that's going to allow them to continue making money in the future for a consistent period of time. Although we need to be teaching people how to be financially literate, how Robinhood is taking away the people's free market and ability to invest, and most of the time when retail investors start entering the market again, it's when we're almost at the end of a bull market. Think back to the tech bubble. This is an extremely similar situation to 2000 when a lot of tech companies were getting hyped up, retail investors were joining in, putting their money in online brokerages, shooting the stock prices up to the sky, up to the moon, and then it caused a huge dramatic sell-off where a lot of retail investors, a lot of people in general, lost money. It caused years and years of retail investors being more concerned or more fearful of getting back involved in the stock market. And that's where I see us going here, where we might still be at the early stages of the cycle, and some people might make a great amount of money with GameStop or some of these other stocks that are going up. But in general, because they're only educating themselves on this one little issue or this one little situation, they're not understanding long-term investing fundamentals where you can actually be valuing businesses and purchasing strong businesses that are going to continue growing and making you money in the future. And that's where I see the issue is with a lot of these conversations and interviews and tweets and articles that are coming out with everyone giving their own opinion about what's going on in the market right now. And before I get right to the last point that I want to mention, if you're enjoying this, thank you so much for being here. If you're a subscriber, thanks for coming back. If you're not subscribed, I would love if you could subscribe and continue to learn with me as we go about in this world of investing. But the last point I want to make is it gets to the question of what is investing. And in the interview, Kevin O'Leary talks about how speculation is really investing.
Speculation is definition of the market.
I don't kid.
Yeah, the bottom line is when you put money in harm's way in the market, you risk it. That will always be the way after both you and I are gone. And the more regulation you put on it, the more you hurt it. Because some people to investing, a millisecond is an investment, and others, 10 years. And you shouldn't have the right to define it for them. Let the market do that. That's what the market does. If we want viable capital markets, you have to let the market be the market. Just shine transparency on it. Don't try and make rules that have all kinds of second consequences that you can't determine
There
at
is
this
no
point.
transparency.
But in my opinion, speculation is different than investing. Speculation is gambling. Speculation is when you're making decisions where you don't have much to go off of. So you're mainly just basing what you're actually investing in or putting your money in based off of gut feelings rather than fundamentals. Investing is something slightly different than gambling because it's based on a little bit more fact, or it's based on a little bit more fundamentals. And with both speculation and investing, you can make money, you can lose money, you can make great decisions, and you can make bad decisions. But the difference is that one is mainly where you're actually not doing the thinking for yourself. That's what I believe is speculation. And investing is where you're actually looking at fundamentals and being able to understand with a better viewpoint of what the risk actually is and what the reward might be, so that you can make good decisions with what you're doing with your money, and that money can actually make you more money in the future as well. So I do think that there is a big difference between speculation and investment. And I think in this situation, we're at a point where speculation is really high. People are just guessing on things and looking at hype cycles rather than actually looking at fundamentals and logic when they're actually making their decisions. And now, even though sometimes I don't always agree with Jim Cramer, in this situation, I actually appreciate his most recent tweet. He basically is talking about some of the warnings that people need to be aware of. The retail investors, although there is a huge reason for people to be getting involved right now and understanding that right now we need to create more visibility, we need to create more transparency in the market. I think the important thing is to remember that we need to be warning people as well about the short-term dangers, because it's going to take time for the system to change. And in that window, the people that are less educated on the financial markets or are more susceptible to just going with whatever the market is telling them to do are going to be the ones that are actually losing in the short term, and the hedge funds are then going to be the ones that win. So there's a gap between when a system can change, and in that time period, I think it's really important to be a little bit cautious in what you're doing. Check out part 3 of my video as well, because we go through a couple great tips in there. But in general, just be careful with your money. If you want to invest, go for it, but just know that this is a really risky situation, or it's just a unknown situation. You know, we've seen what can happen in the tech bubble, but timing the market, as we all know if you've stuck around with QuinnTalksMoney, is pretty much impossible. Some people would say it is possible a little bit, but timing the market is not something that you know. So who knows if GameStop is going to go up to 500 tomorrow, or maybe it'll drop down to 100. But just being aware that this is a really volatile situation and something that's going to be extremely hard to predict. But I hope you stick around with QuinnTalksMoney. Thanks so much for being here, and I will see you next time. I'd love to know what you think in the comments. If you agree with me, if you disagree, I would love to hear it. Thanks so much for being here.